Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 12th of May. Starting off with the FTSE 100 with the dance either side of the 50-day moving average continues. That's roughly around 77.30 at the moment. We've had intraday dips below 7,700, but it looks as though that area is the low for now. Still waiting for the RSI to get above neutral 50 because that would be the real helper in terms of determining when we emerge from this little range. End of day close above 7,800, probably the safest, or RSI 50 plus. On the downside, below the 50-day line is the next area down would be the April support area around 76.30, but as I said, it looks as though we might get away from that. Bit of bullish divergence there with the bear trap yesterday, but a higher RSI low there, so that is also something to maybe cling on. On to the DAX, and here we're waiting for an end of day close through 16,000, which obviously hasn't happened so far with this market, with good support over the near terms, 15,700. That was February-March resistance, and also support now at the floor of the rising trend channel from September around 15,500 with a rising 50-day line as well. RSI in the upper 50s, which is just in the right place for a continuation to the upside, which now could be as high as 16,700 if we get that end of day close through 16,000. Moving on to the Dow, we're still waiting on the big move here. We're probably lucky that we haven't had a big move down, but so far it's now the third test of the 50-day moving average. Bounced off that yesterday as well. That's rising, which is useful, and so is the rising 200-day line. Looking for that end of day close through 34,000 to give us a move up towards the top of that rising September trend channel as high as 36,700 over the summer. But obviously at the moment that seems wishful thinking. The real block in the near term is the way that the RSI has failed below the neutral 50 level. It's now 46, and so the easiest thing here would be to either wait for an end of day close through 34,000 or for the RSI to close above 50. On to Bitcoin, and what we're waiting for here is an end of day close through 30,000, which is obviously not looking as though it's going to happen very quickly. We've broken down through the old support there from March, 26,700, which leaves us vulnerable to a move down to former August and February resistance at 25,000. The lowest we're looking at the moment will be the floor of that rising trend channel from the summer and the 200-day moving average at 22,300, but hopefully we'll get away with just a move towards 25,000 or somewhere where we are now. Moving on to the stocks, and I haven't looked at Angus Energy for quite some time here. It looks as though the shares are just starting to bounce off that rising trend channel from back in December, which is a bit of a relief. We've already got the 50 and 200-day moving averages rising. They're still rising, even though we've dipped down from near the 2 pence area last month. Still waiting for an end-of-day close of the RSI through neutral 50, or the back above the 50-day moving average around 1.6 pence. So those would be the triggers. And if you're really fussy, wait for the a break of the initial May resistance of 1.7. But otherwise, while we're above 1.4 pence, recent support and the floor of that channel, the big picture target here over the next 1 to 2 months is back to 2.2 pence. On to a stock which I don't think I've ever covered over the course of the Bulletin Board of Heroes, which is quite an achievement. Here we've got Advanced ADVT. That's the right way of calling the company. Broken through the 200-day moving average. That was around 75 pence, and looking for 86 pence at the top of that broadening triangle from back in the summer. Only well below 70, really killing the idea of a recovery here. On to a requested stock, which I was going to cover anyway, because it's very exciting at the moment with Ben's Creek, MBU getting out and the new people getting in. And here we've had now 3-4 days, practically the whole week above the 50-day moving average at 18 pence. Above that, we were looking for 26 pence, perhaps as soon as the end of next month. That's the top of that falling trend channel from back in November. Moving along to another requested stock, which is Cleantech Lithium. Here we see the shares at the most oversold for quite some time, I think since basically July last year, maybe a bit more oversold in April last year, but pretty oversold after the move down from 90 pence, which is rather painful, one would suggest, but we've got multiple support points in the 35 to 40 pence area, so hopefully with the oversold situation, this is roughly the bottom, or we're just a day or two away from the bottom of the move. If you're cautious, you wait for either end of the day close back above April support, the old April low there, 40.5 pence, or wait for that line of resistance there from February to be broken. That's currently around 42 pence, but as it is, hoping that the old support there, I think back in August around 33, 34 pence, won't be touched and will bounce from above that area. On to another stock which doesn't normally make it to the bulletin board heroes, Gulf Keystone, and here it's interesting that shares delivered a bear trap from below the old March low there on 130 pence, higher low then for the end of this week, breaking neckline resistance around £1.44, and above that we're looking for the top of the falling trend channel from March as high as £1.66 as soon as the end of next month, perhaps even sooner. The other point to note there is that there was a gap down at the end of last month, top of that gap there at £1.47, and so if we get an end of day close back above that, we're looking for that would be another confirmation of the move towards £1.66. The only thing missing maybe is an end of day close above the RSI 50 level. We're already above there, but if we close above £1.50, then we'll get our 50 plus RSI as well. On to Hemogenyx, which I think in the recent past I've normally called the shares correctly from the dips. The other one was back in December, and then we broke the 1.7, 1.8 pence resistance, and it was off to the races. Now we've had enough time to consolidate since January, broken above the 50-day moving average with a double bounce off the RSI 50 level. That suggests that we're going to head up to 2.6 or 2.7 pence as soon as the end of this month, and perhaps even sooner. The rebound scenario in force while we're above 2 pence, which is basically the floor of that rising trend channel from back in January. Moving on to Ironveld, where there's been a rising trend channel here since basically August, floor of the channel around 0.33 pence, and we've broken back above the 50-day moving average at 0.35. Basically above 0.33, looking for as high as 0.5 pence at that August resistance line projection. If you're fussy, maybe you're waiting for a break of that resistance line there on an end of day close basis, or obviously to be back above the 50-day line just below where we are now on a closing end of day close basis. Next stock is the weirdly named Itsarm, and here the share's up 50%, which is no mean feat in current market conditions. What you can see here, if you look at the close charting situation, is that we had a bear trap just below the 0.25 area. Looks like we've got a resistance line break there above 0.33, and then that would take us up towards the top of the broadening triangle there from back in March at a penny over the next 1 to 2 months. But this looks interesting off the back of the bullish divergence with the lower lows for May, but higher RSI trace on its arm. Moving on to Polarean, which hasn't covered itself in glory over the recent past, but looks as though it is finally emerging from the darkness. Here you can see a rising trend channel on the daily chart from February. We've broken above the 50-day line yesterday around 24 pence, and above that looking for 40 pence as soon as the end of next month. Nice push for the RSI through the neutral 50 level as well. Hopefully this time we will stay up above that. But just the only thing maybe to wait for now is for the 50-day moving average to start pointing up. But we've already done, I think, enough in the near term to get a move on for the stock. Panthera is next, if I can get the correct chart, and here we have it. Here we've got a situation where we've got a turnaround for the shares. Bullish divergence there for the start of last month. Very good bullish divergence, I would say. So a bear trap below 4 pence. The RSI much higher there. And the view now is that the longer we stay above the 200-day moving average at 5 pence, the greater the chance of a move to 7.5 pence, perhaps as soon as the end of this month. Moving along to Proteome, where they've gone off to California with their state-of-the-art new facility, which seems to have excited the share price to some extent. We're still trying to break that trend line there from July 2021. Probably need to clear 4.5 pence on an end of day or a weekly close basis to then open up 6.5 pence at the top of the 2-year rising trend channel. Recovery in place while we're above 3 3/4 pence. On to the last few. First one is Redx, and here we're looking at a situation where the shares have been sort of tentatively recovering over the recent past. The reason for inclusion today is we're just about to touch the 50-day moving average at 34 pence. Above that, looking for as high as 45 pence by the end of next month, given that it appears we've got a rising trend channel there from back in February. Surface Transforms is another stock which I haven't looked at for a while. Here we can see that the shares have been in a tentative recovery since the bear trap in March, and now with support at the 50-day moving average, we're looking up to 55 pence as soon as the end of next month, while we hold above the 34 pence area. Nice RSI bounce on the 50 level as well. Finishing off with Woodbois, which I would believe or imagine caused people some pain over the recent past. Here we've broken above recent neckline resistance, the key level there, the initial peak after we fell. We gapped down in April, so call that 0.43 pence above that. Looking for the shares to maybe fill half the gap down, so get up to 0.65, 0.7, something like that, as a best case scenario over the next 2 to 4 weeks. But the key here is holding 0.43 pence. That's it from me today. More updates over the weekend.